90% of stuck companies and failed companies are not the reasons that we say they failed, like they didn't have product market fit or they ran out of cash or the founders didn't get along. It's the psychology underneath. If you actually look at the source of those problems, it was these very consistent psychological patterns that founders run into. So hero complex, warrior, imposter syndrome, over-identification with the company. It was all of these things that I kept seeing over and over again that led to the decisions that got them stuck. And so, yes, while it's true, they got outcompeted. Why did they go after the big market? What led them to do that? Why did they try to compete against these companies they were competing against, right? And then you start to tap into what's really going on. And you see, oh, I see, they're trying to earn validation. They are trying to get redeemed as an entrepreneur. They're trying to live up to their parents, their older sibling, their peer group, right? And it was that desire that led to them trying to go after this big market and raising too much money that got them stuck. And so I like to work with the source material, which is, why did you do that?
Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. This week, my guest is Dave Hirsch, a former founder and CEO of a software company himself. He works with a lot of software founders and companies these days. Just bought another software company, but he's the author of Reignition, taking stuck startups and bringing them back to breakout winners. Most software companies, as they grow up, go through phases, and hopefully it's not too permanent where you get stuck and it isn't moving as fast as you want. And bootstrap founders don't have investors that want to shoot them when things slow down. But, every founder and every company gets stuck along the way. So we talk about the journey of getting unstuck. And Dave shares his own journey as the former CEO and co-founder of Jive Software, which was bootstrapped and then raised VC funding and eventually went public, and the challenges they had to make the most of that dream. Many of the challenges were brought on by Dave's own psychology as the CEO, and he talks about that and now works with founders. The software founder is part of getting unstuck, and there's other levers in the business as well. We talk about those in the current AI world. It's a great discussion with Dave Hirsch. Hey, Dave, welcome to the Practical Founders Podcast.
Thanks so much for having me. Excited to be here.
Yeah, we met in person in Park City, Utah, a couple months ago at the Lighter Capital founder event there. You were a speaker in a very engaging topic, talking about stuck software companies and their growth path, stuck founders, and the challenge that goes on inside their heads as well. You've been through the game a long time, and you've got a new book called Reignition about getting startups unstuck to, the back to breakthrough growth game. So a lot of topics to talk about here on the podcast here. So you're in the Bay Area. You've been out in Silicon Valley for a spell?
For a spell, yeah. I grew up on the East Coast, but always wanted to be out here where the entrepreneurs were. So I initially came out in the 90s during the dot-com revolution, and then spent some time in New York City, then Portland, Oregon, and then came back in 2009. So I guess this is officially home.
Awesome. Well, great. And there's a lot going on in Silicon Valley these days. And you were a bootstrapper who got funded later in life and, even helped out some VCs there. So you can speak both languages. Not too many people can these days here. Tell us about your first big experience in software. I guess that's Jive. I don't know if you did anything before that.
Sure. Yeah. So I met my co-founders of Jive at .com. So when I moved out here in 97, worked briefly at a .com that was trying to help charities get money off the internet, but didn't really work so well like a lot of the .coms. But I met these guys and we all collaborated together on this startup. And my first day to go meet them was actually September 11th in New York City.
Oh, of course.
So you can imagine it was slow going. There was no money to be had. And so we bootstrapped it. And we did that for about 5 years before we took funding from Sequoia and went up market and chose a different path.
Funding and going up market, all in the same day, probably.
Yeah.
Kind of a playbook. Yeah.
Exactly. Yeah. And I talk about this, that it turned out to be the mistake that I made.
Oh,
So, you can always look at your company with a comparison company. And in our case, that was Atlassian. So they were a couple guys, we were a couple guys, and we all founded these companies together. We're doing the exact
yeah.
same thing. And in a fit of fear and insecurity that came when Facebook burst onto the scene, I was like, I want to be the Facebook for the enterprise. And so that means raising money from top tier
Yeah.
VCs. So I killed our $12 million profitable old business that we were doing and went up market to go sell this new product. And it worked initially. For the next 3 years, we went 0 to 60 million on this new product, selling up market, but I was running somebody else's playbook. And so I had really sold out the soul of this business in order to pursue this big new market and hire a bunch of fancy people and salespeople and execs and board members and everybody else. And it wasn't really the soul of the business ultimately. And after I stepped down, so I had a personal crisis and asked the board for help, and they were like, be chairman, because they had no idea how to deal with emotions.
Right.
So they just pushed me into the chairman role in a really awkward change of power as the company geared up to its IPO on the NASDAQ, and it kind of died on the public markets. And so I watched this play out from the sidelines. And obviously, you could tell it was pretty frustrating, and I was angry at the people for running it into the ground. But then when I rewound the tape, I was like, well, I set those wheels in motion. That was really me inviting all those people to the table. And so a lot of the work that I do now is certainly a reflection of what I went through and what it really takes to build a healthy, sustainable, long-term company. And seeing
What a
the
concept.
shadow side
Yeah.
of insecurity and fear and an attachment to our identity as the company. And so people over-identify with the company, meaning the company's
Yeah.
success or failure is their own. And that tight
Oh, my
grip they
goodness.
hold on to the success of the company really strangles the company in a way, and is the one of the things that is really contributing to its failure in the long run. And so if we can let go of that, then we can let the company breathe and have a much better chance of succeeding in the long run.
Well, there's a lot of stuck software companies out there, and the different standards of stuck. If you raise 10 or 20 or 30, 50 million VC funding and you don't have a crazy growth year, like successful growth year, you're stuck. It's like you can't raise another round. It's kind of a wounded company. But, bootstrap companies with their own reasonable growth rates, their own definition of what success is that year, they get to redefine it. There's a lot of stuck software companies as well that had a growth surge or at least got over the startup stage and are into more of a growth phase. And, it isn't growing as fast as they'd like, and the world is changing and so forth. So we'll talk a lot about stuck there. The company that you talked about that you helped found and grew as CEO and eventually the company eventually went public, that was Jive Software, right? What was Jive back in the day?
Yeah, so Jive Software, that's the one I was talking about. We founded in
Yeah.
2001, and it was collaboration software, initially software for developers. And
Like
then,
chat, like, the classic,
yeah, the original
maybe
product
Slack or
was
something? Yeah.
discussion forums, right?
Ah,
So,
yeah.
it didn't seem like the sexiest product in the world, but people needed discussion forums. They needed ways to communicate online. And so that was
Ah,
the first product. And, it's a lesson in that idea that we don't have to go after the big market right away. In fact, that's usually the mistake that I see in a lot of the stuck companies is that,
right.
well, I got to raise money, and so I have to go after a big market. I have to have a big TAM. And the reality is that's really dangerous because you're going to start competing against people much bigger than you out of the gate. Instead, find a beachhead, find some market that you can win, that you can do something really well. And the companies that I've seen that are highly successful stay in that beachhead longer. They find one and they stay in
Yeah.
it longer. And then there's organic growth beyond that into these adjacent markets. And so, yeah, discussion forum software is an example of that, right? In the
Yeah.
early 2001, people needed that and they needed one written in Java. We had that and we sold thousands of them
To companies, right?
to companies.
Or
Yeah.
their own discussion boards, right? Get people talking and
Yeah.
development and yes. Okay.
Yeah. And that
Wow.
turned into more of a collaboration suite over time. But it was that beachhead that allowed us to become a much larger company.
So did you have any funding as you got to 10 or 12 million? Was this literally customer funded, bootstrapped with revenues?
Yeah, all entirely bootstrapped.
Okay. And then, the flag went up when we all got broadband and mobile and Facebook was exploding at that time. And did your whole team want to, do the let's go big game with VC funding and where that leads to, which is either massive success or not so much?
Yeah, I think we went into it, we were tentative about
Yeah.
raising because we had this beautiful company and we controlled it ourselves and the board
Yeah.
meetings were just us at a restaurant hanging out, right? And you go from that world into having Sequoia breathing down your neck and all these other people coming in and expecting you to run the playbook and do the thing. And it really, I wouldn't say everybody in the company was excited about it. They really did like what we had and the culture that we had built. And that was signaling a pretty big change. And it really was a big change. So we weren't, not everybody was excited about it, but we liked the idea of going big. And
Right.
to us, this was, this equated to the idea of being on a much larger stage.
Well, that's the common attraction of VC capital, the Silicon Valley way, which is you're not cool unless you're going big, and you can't go big unless you get VC funding. When you look back at it right now, could you have gotten much bigger, in your beachhead and then expanding and, with a different, let's say, speed or something like that? Could you have gotten too big without taking the bait of you can't go big unless you raise big VC funding?
Absolutely. Well, Atlassian did it. They eventually raised
Yeah.
VC
Yeah.
funding, but now they're a $50 billion company. And, they didn't raise for a long time and they maintained ownership and control. And they kept doing the thing they were doing, where I
Right.
eschewed the old business for the new one and took this left turn. They kept doing what they were doing. They embraced the soul of their business, and being in Australia probably helped, and just kept doing what they were doing. I think if we kept doing that, just growing at 30% a year and supporting that, like that's a really big company. It probably could have been a $15 or $20 billion company. Instead, it, touched into maybe $1 billion in valuation, but then got sold off as the growth rate slowed and they, just ran it for quarterly numbers and innovation died. And, it just became,
Yeah.
it was a sad story. And I know that I was a big part in that and the way that it, shifted gears.
That's not typical, Dave, and I know that's why we're talking and why you wrote the book and your own personal journey and a lot of the work you do with founders. You didn't say the market changed, we couldn't grow fast enough, blame it on the VCs or whatever. There's a lot of personal responsibility to the decisions that went into it, the execution and the thinking behind the company and so forth that you take responsibility for. So, you know, um, looking back there, did it feel like it at the time? I see the problem and the problem is me, or was it
No, I
something else
wish.
going on? Yeah. Right. Yeah.
It
Yeah.
might have been a different outcome if I had seen what was really going on. But it became
Yeah.
a lot of the work that I do, right? And so
Yeah.
karmically, it's all wonderful, right?
Yeah.
It was. And by the way, these are very higher order problems, right? It was like, well, my company still went public. It was still a good ride and I
Yes.
enjoyed it. But looking back, I could see where the mistakes were made and where my own
Mhm.
fear and insecurity got in the way of sound decision making and where I couldn't show up as my wiser self. And so helping founders access the part of them that can actually build a long-term, very valuable organization. It's the same work. It's the same work that makes you happy as an individual, that's going to make you a better leader, that's going to build a more valuable company, that's going to have a better exit, that you're going to have a better life after the exit. All of those things, it's really the same work. And so I just try to shine a light on that. And I didn't have that for myself. So to the extent I can help other founders and leaders just become who they want to become and build something really great without having to be attached to it as their
Oh,
identity.
that. Yes, their identity. And bootstrappers and VC funded alike have this challenge. We all get real or imagined tattoo on our arm, the brand. I am a founder, I am the CEO, and a lot of identity. And that's part of the soul and the magic of these companies. It is built on our superpowers and our way of thinking that gets the thing moving in the world. And that's really exciting. But, are you saying that eventually you have to evolve, or I don't know if you give that up, but be more healthy about it or something like that? How would you say that?
Yeah, I would say that there is an element of it that is a shadow side where in order to maintain that identity, you make decisions that are there to look good as opposed to in the best long-term interest of the company. And those can be insidious. It's not like the person's bad or good. There's no value judgment on this. This is just something we do.
Yeah.
We get programmed as kids, to have this identity and to want to achieve, to earn love in the world.
Yeah.
And that may support decision-making that is burdened by that desire. So, for example, raising too much venture capital or trying to expand too quickly or trying to hire the fancy sales leader because they came from this company. There's a lot of things that we don't see happening that subconsciously are driven by that desire to earn love through the company. And to the extent we can see that, we can start to feel what's really happening. We can be more aware of the subconscious machinations that are at play. We can start to emerge as a leader that can really see through the short term and into the long-term perspective, that can really skate to where the puck is going over the long run and build something that's hugely valuable, not something that is meant to look good in the short term.
Well, there's a lot of profound wisdom in what you just said. We're programmed for achieving, right? And we like to achieve in our crazy ways, not in, we're not going to be a doctor, lawyer, get straight A's or whatever. We're going to build something that changes the world and say, look at that, right? And, our self-worth, our identity, our passions, get tied up into this. Our habits of frugality or non-frugality or whatever get tied into that. Are the founders like Atlassian who build something bigger, were they more enlightened about their attachments, their emotions, their psychology there, or did they just thread the needle a little differently?
I can't speak to it. I'm not, and I haven't spent a lot of time with them recently, but I think they were certainly in an environment that doesn't maybe have the same story of what it means to be successful. I think here, because venture capital is such a big thing and we get the media stories of how companies are grown, that we are a product of that culture. And they came from a different country on the other side of the planet, which just doesn't have that. And so I think it was a different environment that gave rise to decisions that they made.
Yeah.
And we just don't see how the cultural story shapes us a lot of times, but it does.
Yes.
And companies are nothing if not individual expressions of creativity, right? The great companies are doing something really unique in the world. That's their thing. And so every time we start saying, let's just run the playbook, we're taking away from the uniqueness of the company. It's less a creative act than it is just hustle and execution. But the more it's just an execution machine, the less it has to stand on in the long run. And, Atlassian did something really unique in the world, right? And they weren't afraid to do it. And that was cool. And I'd like to provide some sort of baseline for founders to see into the future, to have their own imagination, to see what they can do through the lives of their employees, through their customers. And if you can come from that place where it is really beginner's mind and trying to steward some sort of change into the world, those are the companies that I think are really unique and that have patience and time to do something good in the long run. It's the ones that raise a lot of money and try to play the game and try to run the playbook that end up in the trash heap with a lot of the other venture-backed companies.
Well, you and I have been around a long time, and we know a lot of founders, a lot of people who've played the playbook game, the fast growth game, didn't pan out like we see in the headlines. We just don't see the headlines of the majority that don't make it so much. Do you work on your business first when you're stuck? Should we focus? Should we pivot? Should we add funding or not, or invest less or more? Should we do something different to get unstuck? Do you work on your company, or does the founder work on themselves first?
I say work on yourself first, that the company won't transform until you do. So there's certainly strategy work to be done, and they can obviously be done in parallel, but the company won't truly transform until the leader understands, what have I been doing that has gotten this company in this eddy, and how can my transformation help it get back on the river? And so I have a chapter 2 in Reignition, which is about the psychology. I almost didn't write it because I thought it would be a little too woo for the founders.
Yeah, there we go. There's your book.
When I started giving the talk, that became the subject matter that people wanted to hear about. It's kind of like, in software companies sometimes when you put your product out in the world and you first launch it, people are like, it's a cool product, but I really like this one feature.
I know, that's right.
You know, and that feature gets
And then
pulled out, and that
surprise,
kind
that's
of
always a
becomes,
surprise. Yeah.
yeah, exactly. The feature becomes the new product because that's what people need. In this case, it was the psychology that became my product and what I was sharing with founders. Because in writing that book, I realized that 90% of stuck companies and failed companies are not the reasons that we say they failed, like they didn't have product market fit or they ran out of cash or the founders didn't get along. It's the psychology underneath. If you actually look at the source of those problems, it was these very consistent psychological patterns that founders run into. So hero complex, warrior, imposter syndrome, over-identification with the company. It was all of these things that I kept seeing over and over again that led to the decisions that got them stuck. And so, yes, while it's true, they got outcompeted. Why did they go after the big market? What led them to do that? Why did they try to compete against these companies they were competing against, right? And then you start to tap into what's really going on. And you see, oh, I see. They're trying to earn validation. They are trying to get redeemed as an entrepreneur. They're trying to live up to their parents, their older sibling, their peer group, right? And it was that desire that led to them trying to go after this big market and raising too much money that got them stuck. And so I like to work with the source material, which is, why did you do that? And then let's go back into that process.
No,
And
really,
that's
why?
the transformation.
Yeah, right, yeah.
Yeah, exactly. And that's the transformation I like to work with because I feel like there's better materials there and the likelihood of success goes way up if you can start getting through those patterns.
Well, maybe there's a different view of this than, you and I experienced 20 years ago in the software game. Founders today, maybe they're more curious about their inner game and their strengths and weaknesses than old founders were. They're just the brute force execution, right? If it worked, to get us here, then it's going to work to get us there kind of game. Do you think, you say founders are more curious about the psychological, founder foundations of the stuckness than they used to be, which is really curious. I wouldn't have expected founders to be so curious about self-examination.
Yeah, there is a big part of this, which is just cultural, where
Uh-huh.
we are much more aware of and open to forms of therapy and psychology and awareness of
Yes.
mental health issues,
Yeah.
much more so than we ever have been before. And that's wonderful. And the internet is a big part of that, people sharing these stories and being open about it.
Yes. Right.
There's another thing that's happening, which is what my second book is really getting into, which is that the technology landscape is being rapidly democratized and commoditized. AI
Yes.
is demolishing forms of traditional competitive advantage. And so the ability to stand out through tech IP and competitive advantage that is your technology is getting, harder and harder by the day, right? And I
Right.
see this happening. And so what are you standing on when that's not the case? And
Uh-huh.
I believe that the companies that have long-term potential in the next 10, 15 years are going to be those that are held together by human connection, right? The technology is going to change so rapidly that it's going to be hard to have that as your infrastructure for scale or profits. Instead, it's this deep connection to the people who work for your company, to your buyers, to your partners, these bonds of connection and loyalty, the things that are uniquely human. That's going to be the area of frontier where big companies can be built. And I'm starting to see a wave of
Oh,
founders starting to invest in this because they're seeing how much power and potential there is to have a team of people who are black belts in human communication and connection, right? They can work through really hard issues. They can be emotionally mature and responsive. They can build very deep relationships with customers. They can do active listening. These are the types of core competencies that companies are developing that can hold it together over the long run when technology no longer serves that purpose.
does that mean brand, whether it's an employment brand or a customer brand and the founder brand, right? The founder has a point of view and, can speak. Elon Musk has his own point of view, right? That apparently is worth a lot to the company. What do you mean by the human element? I don't disagree. I'm just looking for how can we describe it to see what a lily pad might be, the moat that people might head towards if it's not, it's hard to build this technology.
I mean, you think about a place where people feel alive. They not only
Yeah.
feel a deep sense of belonging, they feel it's a culture in which they can flourish. They feel what it means to be human, right?
Yeah.
And it's in the most aware sense of that word, that we are in this system where I can be who I really am. This is what I was put on this planet to do. And I
Right.
feel deeply connected with these people. I feel a sense of love. I feel a sense of curiosity. There's humor. There's vulnerability, all of these things that make us human, but in the context of work. And it's really hard for us to imagine in some respects because it's almost like we've been the processors inside the computer for a long time, right? We've
Yeah.
been moving data around and putting it into context. We email spreadsheets with things. We're
Yeah.
not doing that anymore. It's starting to go away, right? And so we're kind of rubbing our eyes and going, okay, what do we do now? Well, we have to do the stuff that's really uniquely human. And so everything from, I have this thing called emotional market fit, which is going deeply anthropological in our product work to really understand the lives of our customers. What is their current emotional state? What's their desired emotional state? What is their life like? And how do we go so deep into their world that we become a trusted part of their system of thriving, right? What does that look like? To the way in which we work with our teams and our employees, the way that we bond with our customers over the long run, and such that they're loyal for a long, the long run. And I think there is just a level of this work that I'm seeing happen in this first wave of Silicon Valley companies, including some of the really big ones, that is changing the way the work is done. And so, if we don't have to do the processing work anymore, because, by the way, computers are much better at it than we are. What are we doing? And what are we really good at? And what are we investing in? And it's those companies that I think have the potential to become the breakout companies of this next generation.
And you mentioned big companies are doing it. Like, we have the stereotype of the big faceless machine, right? Institutional, corporate bureaucracy. We have a similar story about the faceless private equity spreadsheet driven playbooks, right? That takes the human element out and it's being more dispassionate about everything. But you're saying that there's ways to do that even if you are big, right? To have that. It's not just think small like we saw in the 60s.
Yeah. I mean, out here in the Bay, you try to recruit the best and brightest. There's no way you're going to get those people if you are not enlightened as a culture. These people are doing meditation retreats. They're going down to South America and doing psychedelics. They are doing a lot of emotional movement work, somatic work. Like this is the life that they are in. And if they're just going to join a bank and work in a suit, it's not going to happen.
Right.
So the big companies, I'm part of a group called Art of Accomplishment that does a lot of this inner work. And it's a lot of people who are out in the Bay and other parts, around the world. And it's just deep emotional work and you get really high achievers. That's why it's called Art of Accomplishment. And Joe, who founded it,
Mm.
is Sam Altman's coach from
Yeah.
OpenAI, and he's all the Alphabet coaches. And so it's changing. And it's changing because it has to. And you know that the world of capitalism will only change when there's enough pain, right? And the pain that they are feeling is I can't recruit people. I can't get the best and brightest, and I can't have them work well together unless I invest in their inner lives. And now that we recognize that we're not going to be doing rote work anymore, we can't treat people like computer processors, right? You got to treat them like
Yeah.
humans.
Machines. Yeah. Interesting. Well, you went through your own journey here, which was no small feat, right? You left Jive eventually, and I'm sure you went through the emotional journey there. But you've done a lot of psychological work yourself, and some of the topics you talked about in your talk at the conference. Talking about the different work that you've done and the new tools that you have, and uh, the let's say the new view of your story. You've done a lot of work through the years. Is that right?
I have. Yeah. I suffered. And when you suffer, eventually you step up and do the work. It took a long time to get there for me, but I kept trying to think my way around it. I kept trying to use the intellect, as a good CEO often does, to try to work my way past the pain. But like a lot of people, I had a big exit and then suffered a depression. And that's one of those problems that you can't talk to a lot of people about, because you're basically trying to say, well, my newfound wealth is making me sad. I have too much freedom. You can't really talk about that. But it was real. And eventually I stepped up and did the emotional work. And that was where the real change happens. It was not in the intellect. It was in the body. It was in the emotions. And that what allowed me to start reprogramming my own source code, and did all manner of inner work. You name it, I did it. I took on everything.
Is that something that you can do yourself, reading books and watching YouTube videos and the rest?
No.
I found that yes, I can make a little progress there, but the actual progress for those really deep things, I need somebody showing me something I didn't see, pulling me through something I couldn't pull myself through, and all of that. Coaches or programs, or I don't know, what forms did that take as you went through this process?
Again, I did every modality you could imagine. One of the ones that kicked it off, that was the gateway for me, was the Hoffman process, which is a fairly popular one. It's been around for 50 years.
Yeah.
And this is a week-long off-the-grid intensive that's meant to, in a way, excavate your root structure, to understand, why am I the way that I am? And why are these patterns that I keep repeating in my life happening? And how do I rewire those programs in ways that are healthy? That was a really good one. And that kicked off a line of work that I did that was much more emotional at its core. And I think was the shift that ultimately helped me get to a much better place, and where can truly say I'm joyful about everything I do now. And it took a long time to get there. And I don't think it's just a midlife thing
here. So what's a long time, to do that work? And I know you were doing some other things too, helping out companies and doing turnarounds and, all of that kind of thing. But was this like a 5-year process? I mean, it never stops, but did you feel like you had made a dent in it? And
I would say there was 5 years of darkness, followed by 5 years of slowly doing the work reluctantly, but it was still kind of dark. And then 5 years of like, all right, I got to really step up and do this. And that was when things shifted. Yeah.
Thanks for sharing that. It was a little bit like founders admitting how long they went without paying themselves. And then everybody in the room saying, gee, I did that too. And everybody feels better. And, they're building it in a certain way, but they're investing in their companies. But it's something nobody talks about. And it usually takes longer than people think, even if you're ready.
It does. Yeah. Well, the system is what the talk that I did where we met, I was basically shining a light and saying that 95% of us suffer while we're running our companies, some form of mental health issue, for a 10% chance of success. And even if we do have a big success and we're in that lucky 10%, we have an 85% chance of suffering afterwards. So I was like, this is the system we're growing up in. Is this really what you want to be a part of? And what I said was, it's the same work. No matter where you are in that journey, it's the same work that's going to make you more joyful in the moment, have more fun while you're running your company, build a more valuable company over the long run, have a much better exit, have a better life post-exit, do it again. But when it's no longer burdened with the attachment to self, and that this work is me and I'm going to be validated or redeemed or loved or not, if you can get that out of the equation, everything opens up, and that's the emotional work. And so I'm really just trying to use my screw-ups as a flashlight for other founders to say, there is a better way. And I am the opposite of the person who gets up in front of the stage and goes, look at me and all these things I did, and this is my path, and here's my playbook.
Yeah, that's great.
It's really saying, no, I screwed up all of it, and I got really sad and depressed, and I've learned these things, and I'm just here to help. I'll shine a light on the work, and then hopefully you find some nugget that leads you to do more and take on a path where you can become that leader and become that human that you really want to become.
This podcast is brought to you by my friends at Fraction. Are you stuck at your 7-figure ARR with tech challenges holding you back? Whether it's tech debt, slow feature delivery, or other scaling challenges, you're not alone. Every founder hits this wall. That's where Fraction comes in. Fraction gives you access to senior US-based engineers and CTOs without full-time costs or hiring risks. Fraction founder Praveen Ganta is a practical founder himself who has been on this podcast. He grew his bootstrapped SaaS business, Hidden Levers, with fractional talent and sold it for more than $100 million. Fraction's experts come in to fix problems and do real work, not just give advice. Fraction is flexible and founder-friendly. Get 10 to 30 hours per week from vetted and experienced US-based talent. And you could start with 1 week risk-free trial to test it out. Find your next fractional senior engineer or CTO at fraction.work. Now back to our podcast. And what are you doing these days? I know you've got a book and you're speaking a lot. Are you doing some founder coaching? Very savvy as an operator of a software company, but also, aware and using these kind of emotional and psychological tools. Do you do coaching, or what do you offer these days?
Yeah. So I write, working on the next book and doing articles and content and a newsletter. I speak, go around and speak at conferences and places that are open to hearing my woo message of the future of capitalism. And I do executive coaching, and I'm executive chair of an energy company that does EV charging. And last week I just acquired a SaaS business.
Let's talk about that. You've been acquiring businesses and doing the turnaround game, right?
Yeah.
Is that right? You would say? Yeah.
Yep, exactly. And so this was a very good opportunity. Someday we'll announce it and I can talk about it a little more publicly, but we got a very good deal on a company that is shrinking, but has good potential. And the idea is, can you level the cruising altitude so it stops shrinking and then infuse enough innovation that it can get back on track? Because they have a lot of customers and a good brand. It's just on the downslope because it's been owned by private equity for a while. And how do you make it more modern and reinvigorate the product with AI first mentality, but still go deep into, again, the hearts and the minds of the customers and go back to serving them. So it's a chance for me to practice what I preach in the books and not lose touch with what it's like to be an entrepreneur. I think if I just wrote books and spoke, I would drift off into the psycho-spiritual ether and no longer have the resonance that I might have with founders. So I like to keep a finger on the pulse of what it's like to be in the driver's seat. I'm not CEO of this, but I'll likely be chairman.
Well, private equity views growing and struggling companies. When they get involved, they view an opportunity. They have a rubric for their, opportunity evaluation. Do you view like good bones and all of this, but the wrong soul, the wrong, human factors in there as, looks like an opportunity. Those are fixable and figure outable, but they wouldn't be able to do it. So with the right human connection and AI powered leverage, is that a simple version of how you might view this opportunity?
Yeah, exactly. You go in and you look at it and go, there's a lot of problems. That's great because I know how to fix those problems.
Yes, right. Yes.
There's a lot of things that private equity literally just can't do. They are focused on numbers. And as you can tell, I'm focused on the imagination and creativity and the subconscious and human connection and emotions and things that they are never going to think about. And so what would it look like to take this company that is struggling away from them and infuse it with life in the form of customer connection and employees who are thriving and creativity in the product and innovating there and trying out new things and just being weird and creative and, all those things that can make a business really interesting over the long run that you just couldn't do if you are operating under the machinery of financial outcomes.
Yeah, weird and creative don't show up in the private equity playbook these days.
No.
Dave, are you going to be CEO of this company?
No, I will probably just be chairman, advisor. I like to think of myself as a roll up the sleeves support person, what I call operator-led buyouts. So I partnered with a guy named Bob Tinker. He was the founding CEO of Mobile Iron. So like me, founded a company and took it public. And we like to think about this as just the roll up the sleeves Midwestern approach to refounding these businesses, right? And so breathing life back into them. And what I found in my time in venture capital and in private equity is certainly in venture capital, you've got, again, 10% or less of companies is how they make their money. On the other end, you have this 30 or 40% that just fail to launch. But in between, you have this really magical group of companies that actually have product market fit. They have some traction, but they tried to grow too quickly. They were like middle distance runners that were forced to run a sprint, and they never made it around the track. So those are the companies where I think there's really interesting bones. There's really interesting stuff going on. They have a market. They're not about to get destroyed by AI. And you can go in and breathe life back into them, reconnect with the customers and think about innovation from a place of having, 10 million or more in revenue as opposed to, starting from scratch or square one. And so it's a different approach and reflects what I've learned in this space, that companies just need their own care and feeding, and it's all unique. But when we try to apply the playbook over and over again, we just run most of them into the ground, and that's just not what these companies needed.
Yeah, I often think about it with CEOs that are in my peer groups and I work with, and I've been through this game myself, but what would a different CEO do in and my role if they took over for me to get unstuck? And, just as a way of thinking about it, now you actually get to do that. And presumably from a more healthy approach that you're talking about, what are the typical, let's say, non-founder psychological, what are the typical business challenges that companies have created for themselves that get them stuck? And how can they think about getting out of them? I'm thinking founders in the audience here who said, I get a tough year. Did I do that? Is that about me? Or, is there something in the business? One of them is you mentioned scaling prematurely. Why don't we just talk about that and see if there's other ones there that you see typical plays that get companies stuck?
Yeah, that's a really good one. That tends to be the most pervasive. And there's a lot of problems that are underneath that of scaling prematurely. But that's the one I see most frequently.
Meaning we've got a good idea, and I guess that's the hurry up and put some rocket fuel on it, some VC funding, and, hurry up and get big fast kind of thing. Can you scale prematurely as a bootstrap company? I guess you could fall into the target market trap and try to be everything to everybody. But
Yeah.
what's an example of scaling prematurely?
So for a bootstrap company, you mean?
Yeah, sure. Yeah.
Yeah. I think with bootstrap companies, what I see is more market expansion too quickly. So they've done well in one market and then they try to do the same thing, right? Because they were successful in that. So they try to we'll just go do it over here. Let's just repeat the thing that we did and then we'll repeat it over here and over here and over here. So they start to see markets like pellets for the Pac-Man to eat instead of these are unique markets that all have their own, very unique attributes and desires for the product and what they're trying to achieve. So that's the one I see more often in bootstraps is they get out past their skis by expanding markets too quickly, thinking that other markets are going to be identical to what they faced in the first one, but not recognizing how much time it took to get that first market to really kick in. So I do see that one. I see bootstrap companies hiring the wrong team a lot of times.
The big team, the experienced team, that kind of thing.
Yeah, well, it's one or the other. Either they stay stuck in the world of hiring lots of what I call manager level people who are really good at their positions and they are great people, but they don't have the level to work well with other teams and groups. And so they get stuck a lot. So you get this weird top heavy thing where you have the CEO and then a lot of lower level manager people. And it just gets the friction. As soon as the company starts to grow, there's a lot of friction in getting those lower level people to try to up their game.
Yes.
And then you have on the other side, trying to hire people that are too experienced too early. And these are people that have worked in larger companies. They look very fancy on paper, as they tend to do, but they've worked in larger companies and they come in and want a big team and they're trying to execute at a level the company's just not at yet. And so it's a very delicate dance to try to find these, director
Growers.
level people that are, want the chance to be more VP level and earn the right to be an executive. And they've seen what it looks like in a similar sized company, but they haven't had a shot yet, and they can still roll up their sleeves and get work done.
Yeah.
That's the delicate dance that's really hard. And I see, companies suffering either kind of one side or the other. People that are too big company and, trying to build machinery long before the company is ready for that machinery to be built, or people that are too low level and they're just scrambling around doing a bunch of work, but not having any sense of how to work together cross-functionally or build a strategy that can scale.
Yeah. Yep. It's pretty tricky. Creates a lot of mess. You create that mess faster when you raise funding and you have to throw in a team really fast and get that going. Let's talk about the expanding your market too fast. You get something going, maybe 5 or 10 million, like you did with Jive, and you see maybe in a vertical, you see in a related vertical, right? The one plus maybe a sideways vertical, or in horizontal, the classic one is we came at this level of the market and we want to go up market or down market, depending on where they think the market expansion is. The big pond, right? We started here so we could get there and keep going. And this is a classic focus question. And you also put out like the core business versus the innovation business. Like how, what is a reasonable way to scale, practically, if you will? Is it just move a little slower, be more deliberate, do better experiments and MVPs, small bets before big bets? And, how should they play this innovation game to see if they can expand but not tilt themselves over?
I think your answer was great. I would do what you
Okay, great.
said.
Yeah, yeah.
Yeah.
What does that look like in your, way of thinking?
Well, since you've read the book, you know that I focus a lot on core, and
Yeah.
oftentimes the businesses that I buy really inexpensively because they've messed this up is they have gone beyond their core too quickly, and they have left the customers that were their early customers behind in that process to go expand. And when they look at the business, they look at it collectively. They look at it almost like one big P&L, right? As opposed to
Right.
the core of this business. And the core, what are you best in the world at doing?
Yeah.
And oftentimes when I come into these companies that have scaled prematurely, it's almost like peeling football players off of a fumble to figure out what's the core. Like, where is this thing? I know it's in here somewhere. Like, what is your best in the world superpower? And let's get back to that and let's build a business around that. And so they've often tried to expand too quickly. And that's why, as you said, I like to separate the growth experiments.
Right.
Because what happens too often is they try to jump to new markets really before they're ready. And other people in the business, especially salespeople, want to start selling to these new markets. It's really exciting.
Come
Everybody
on,
wants
yeah,
to work on
let's
the
go,
new
yeah,
stuff.
right.
And so it just becomes part of this Borg of company success. And you wonder why the metrics aren't scaling with the growth, right? Why is it getting so much more inefficient?
Right.
And that's when you have to come and peel the football players back, because otherwise you're going to think that it's all just one business. In reality, you got to go back to what is that original market? Why did it succeed? And run growth experiments that are compartmentalized such that you don't infect the team with these, and only start putting money into them as expansion areas when it's clear and obvious and you're getting pulled in that direction, where it's really working. So you've really proven it beyond a shadow of a doubt. And I think the other thing you mentioned is there is some moderate growth. Like if you think about just building a company at 30% year over year, as opposed to arbitrarily having investors going, I need you to do 150% growth this year, right? Like, well, if you were told me to do that, put a gun to someone's head and said 150% growth, they're
Yes.
like,
Yeah.
like I'll just, whatever, like I got to sell this and I got to go to this market. I'm going to sell whatever I possibly can. And then what have you done? You promised a bunch of things to a lot of people to try to hit arbitrary growth goals. And all of those promises have to come due at some point.
Yeah.
And you can't keep all those customers happy anymore. And so you've just spread yourself thin across a bunch of markets. You're no longer the best in the world at anything. Now you're just this Borg of blah products across too many different markets because you were scrambling for growth as opposed to being curious and learning and waiting for the pull of the market. Instead, you were pushing product on an unsuspecting market and doing it in a way where it took a lot to sell it and a lot of money. And you, at that point, wasted too much money to get there. And so that's why I like to come in. And even in businesses where I'm working with venture capitalists, I push back on them. I can play the role of pushing back on the VCs and saying, nope, we're going longer, we're going leaner, we're not going to raise around for a while. We're going to try to get to cash flow positive because I don't think this business is ready for expansion. But when we get there, it's going to be awesome. In the meantime, shut up. Don't start bothering these people for more growth. That's not where we need to be right now. There's a lot more learning to do. So I think it's that. I think it's patience, and that's why that detaching our identity from the business is so important, because if we are hell-bent and determined on validating ourselves through the business, we're going to try to grow too quickly. We're going to try to do too much, and we're going to surround ourselves with people who are exacerbating that problem.
Yeah, I mean, it's interesting. It took me years to realize that pace is really important, right? There's a time for testing, there's a time for sorting, there's a time for growing. If you get there, you find something worth investing on. And that might not be the same pace as what the founders have told themselves in their heads or the investors want, right? A lot of vertical markets move at their own pace, whether you want it or not. There's some vertical markets, healthcare and others, that you mention AI, they'll stop buying from you. Right. So just a different pace going on out there. It's actually one of the superpowers, I think, of practical founders. If you can build software faster and you can do it at the right pace, you can do it very efficiently and let's say add up these small bets and market expansions and so forth as into to bigger bets.
Yeah.
Does
By
it
the way, I
always-
love the practical founders part of this, which is that one of the problems that Bootstrap founders they have a lot of the benefits that I'm talking about by having this intuition. They're going slow, they're doing it the right way. And that's the beautiful part about bootstrapping, but they often don't have the sandpaper of experience around them who are helping them shape it. And so having these communities of other founders to support them is huge, right? That's one of the most important things for being a bootstrap founder. And I got it through things like EO, which was great and wonderful, but that peer group, those people who are also doing the same thing, who can help give you and represent a sounding board for smart scale and making better decisions is really important.
That's a lot of what we do, right? When to go, when not to go. You've evaluated a lot of companies and you've been there, but at what point you say, gosh, we're innovating, we're going to find something to grow on, our core business is slow, or maybe it's moving down, you're in the wrong place at the wrong time. Is there a time to say, we've looked, we couldn't find anything worth pushing on for a bootstrap or otherwise, it's time to move on to a new opportunity? I don't know what you'd call that, walking away or cutting bait on, maybe a smaller startup that isn't moving so fast. We get attached, so we think should be true that we'll get this thing to infinity. But when should a founder be thinking about maybe this isn't the horse to ride?
Yeah, it's a really hard question, a really important one. And I often do parts work. So at the conference we were at, I helped the founders do parts work, specifically about the exit. And parts work is a therapeutic modality where we start to identify these elements of ourselves, these sub-personalities that are oftentimes driving the car without us knowing. And so when we face a big decision like this, it's really important that we have what I call an inner board meeting. And this is what I take a lot of the founders through. And if you go back, for example, to my time at Jive, and I was thinking about things like the exit, I had a part that was a child self part that wanted security. I had a teenager part that wanted to go travel the world and have fun. I had a hero part that wanted to rescue my whole extended family financially. I had a warrior part that wanted to just keep going and go as big as possible. Yeah, right. I had an insecure part that wanted to see our ticker symbol up on the NASDAQ so it would make sure that we go public. I thought they were all me. In reality, it was these programs inside of me that were subconsciously driving the car without me knowing. And so the inner board meeting is a way to let each of these parts have their voice, understand what it is they're trying to tell us. And by letting each part talk in this kind of inner board meeting, we can start to see what's really at play, and we can get to a much healthier resolution. We can start to see what each part is pushing us towards. Maybe one wants us to sell. The warrior part wants to hold on to the business forever. The insecure part wants to sell. Like you could see, like there's different conflicts that are happening.
Right.
And so the board meeting, just like a normal board meeting, is a chance to have all these parts talk to each other and then find compromises across the board. And so a compromise might be, let's give it 6 months to see if this one experiment we're running plays out. And if not, we'll hire a banker to go sell this company, or we'll do a market analysis of what the company could achieve. Or maybe it's, I don't want to be CEO anymore, but this company can only grow at 10% a year, but that's okay. I want to keep it, but I'm going to hire a CEO to run it so I can go do something else, right? Those are example compromises. And so by identifying the parts, by letting them speak, by running this board meeting and seeing what's really happening inside of us, it allows us to make much smarter decisions about the right thing to do. And that situation of, I don't know if there's a future for this business. We've tried everything. I don't want to force growth and spend a bunch of money. I feel like it's achieved its natural endpoint, so it should be part of a larger system. Let's go sell it. That's a big decision,
Yeah.
and can be burdened by a lot of these charged subpersonalities inside of us. And unless we know what's really happening, it's going to be hard to get to that decision. So that's one of the things that I coach founders on, is these big decisions around what to do with the company and how to see what's really happening inside of us, such that we can show up as our wiser self and do the right thing.
Well, I'm thinking about the hundreds of big meetings we've had with executive teams, my teams, when I was part of a team where we're making bets, right? And making the big decisions. Should we go that way? Should we change this, do this? It sounds very exciting. It's kind of typical story of Silicon Valley. There we were, we made the big bet. But you're saying that, and I'm just thinking about the people around the room. We know them. We kind of have a sense for their stories, their inner stories, right? But I think you're right. It would be very wise if we all kind of brought our, we had our inner board meetings there, played it out, and had the debate in front of ourselves to be more aware, self-aware of what's driving these kind of decisions. I mean, all that fist pounding, we got to go. No, we can't go. And then, in the growth game, the big bets always win, because what do you want to do? You want to go slow? You want to look, weak or something like that? The big bets always sound sexiest, something like that.
They do.
Been through that a lot.
And I was a football player, and oftentimes my football
Yeah.
player will show up and I won't know, right? That's a problem, right? I talked before about bootstrap founders not having enough experience around the table. We have a lot of experience inside of us too. And so that's why it's really important to understand who's at the table right now. Who is driving us to make this decision? And is it really in the best interest of our team, our customers, ourselves, our family? And you need to really go deep to figure out what is the right compromise, what is the right resolution to all of these ideas. And that takes work. And that's what that inner board meeting is.
I mean, maybe that's one of the reasons that VCs, like to invest in companies without a solo founder. They like to have a founding team or co-founders, because maybe there's more wisdom that comes with that peer relationship, co-founders there, or maybe that gets exacerbated if two people have different, people on their boards of directors, their inner boards of directors.
Yeah. I think it always helps to have more diversity around the table, having lots of people with different ideas. And then it becomes about, and this is what I was talking about before, imagine a whole team of people who are black belts in human communication and connection. They're coming together, right?
And, try on somebody else's view.
Imagine if you're on a team of people and they're able to say, you know what, I do want to scale, but that's my fear talking. And, if I step back from that right now, I feel like the right thing to do here is to spend more time in this market. And I feel like maybe that's going to hold us back for another year, but in 2 years, we're going to be really grateful for it. That's
Thanks
the level
for sharing that.
of,
That's a nice way to show that.
Yeah, I think that's going to be the future, is people who have that level of intuition, connection with themselves, and the ability to go deep with each other and be vulnerable, and to not let their parts drive the car, but to show up as their individual wiser selves. And those are going to be the teams that can create something really magical in the long run.
I'm practical about VC funding and Bootstrap. They're, two different ways of doing it, and funding isn't always wrong, and Bootstrapped isn't always right. But you've seen the difference there. But you're not blaming the story on funding or not funding or whatever, or maybe there's more of a tendency there. What's your current view of software companies and VC funding? And here we are, end of 2025, the AI wave is upon us. And you're a different kind of CEO than you were, or, entrepreneur than you were 20 years ago. What's your
Yeah, very
current
much
view?
so. My view is that, yeah, it's not good or bad. It's not inherently wrong to do venture capital. It's right in the right circumstances. Venture capital plays a very important role.
Yeah.
But when I came out of college 30 years ago, it was 8 billion a year, and now it's 330 billion or something. So that's a big shift. And since AI is democratizing the landscape and it's so much cheaper and easier to start companies,
Yeah.
it's got to look very different. You can't sustain that level of VC investment because the companies can't become that large, right? Because it's so cheap to compete. So that's the trend that I'm looking at right now. And you're watching VCs scramble around, and they're looking at
Yes, they are.
the
Yeah.
categories that can support venture investment. So, aerospace and asteroid mining and quantum and deep tech and these things that are really have the potential for unique IP that can drive advantage over the long run. But things like SaaS, not so much. It's going to be hard to build a VC investment moat around a SaaS company in an era when the computers are writing the code. So that's why I think you're seeing a wave of companies that can be more bootstrappy. They can spin up in days and start running experiments and have a few people who are hacking together code and making it work. But I don't think they're capable of getting the same level of investment that they once were, because they're going to try to build infrastructure around it, and then the technology cycles are going to change, and then competitors are going to come up and compete against them for pennies on the dollar. And so I do think it's venture capital in general is in need of a transformation as an
They're a
industry.
little stuck, other than investing in OpenAI and Anthropic and so forth. B2B SaaS investing, a lot of VCs are made bets that aren't paying off, and they're kinda stuck in their own portfolios, and they're not sure how this game is gonna play. Like, can we buy a company like you just bought or invest in a company, just add funding and, within their time frame, make their return on investment? It's not so clear exactly how that's gonna pan out.
Yeah.
It's very confusing for a lot of VCs right now.
Yeah, very much so. I just bought a SaaS company for about 0.1x revenues, and it's
Yeah,
profitable.
yeah. Do you
uh,
anticipate, putting some primary capital on the balance sheet so they could spend a little more than they make, or do you think you can do the bootstrap turnaround from within its
I think I
revenue?
can do a
Okay.
bootstrap
Yeah,
turnaround. Yeah.
okay.
Yeah. In this case, it's my hope that,
Yeah,
there's enough cash coming in that we can orchestrate that. And if things are working and it makes sense, then maybe there's, some investment to be had. But I think, to your original question,
yeah,
it's really company dependent. And we're in an era when I would say probably think more bootstrappy, especially if you're a software company, than going the traditional venture route, because the next 15 years are going to look very different than the previous 15 years. And so those models don't necessarily have the same impact as they once did.
Dave, do you have a sense, this is a big question here, but you and I both lived through the dot-com crash, the 2001 era crash, and the bubble, and the other financial crisis, and the SaaS transformation, and mobile social, global. Like, it's a much different market these days, in large B2B SaaS, the VC industrial complex growing so large. Do you sense that, see any similarities to the bubble, which was a bubble of the dot-com, to the current exuberance around AI? Do you think it's a bubble? Is there any similarities there? I see a lot of differences from the old days, but, do you have a theory about, are we over expecting in the
I
AI
don't feel
world?
like I'm the best person to answer this question. I spend so much time in the world of emotions and psychology.
Okay,
But
good.
I
Yeah,
would say,
right.
from my perspective, it does seem like there is a lot of money that got raised. And those people are essentially money managers, and they have to put that money to work. And they're trying to put it to work in a very small number of companies. And
Yes.
so there's just a race to shove money in the gullets of these, very few companies. And the rest are getting left by the wayside. And so those companies are going to be overvalued at some point,
Uh-huh.
and because there's so much money going into them. And then the rest of the companies are dying on the vine because they took some investment, but they're not getting anything more and they're not getting valued very high. So I do feel like there are, the situation for this to collapse onto itself, the pieces are in place, right? From a technology standpoint. In the meantime, bootstrappers like us just keep doing what we're doing, right?
Yeah.
Which is you just keep creating, you just find new companies, you do new things, you just keep
Yeah.
moving the ball forward. But I do get worried about the cultural shift that we're about to go through as this thing starts to fold in on itself, and we have a tech singularity and a lot fewer jobs, and people who are out there, trying to do whatever they can to make money. And that's the part that I get concerned about, is the who gets lost in the shuffle when you have a big systemic collapse like this.
Yes. And then what else happens as a result of that? So,
Yeah.
really interesting times. Well, back to the game here for our steady practical founder, SaaS bootstrappers from all over the world. What advice do you have for them, just to finish things up here? What advice do you have for them as they're thinking about, oh gosh, I've been heads down and pushing and growing, and I'm seeing some cracks and creaks in our business here, and they're considering a little self-examination right there. What do you think, what advice do you have for them for starting the first steps of the self-examination to make them healthier as founders and make the business healthier too?
Yeah. Well, a lot of my work right now is on human first moats. So as the era of tech-based competitive advantage starts to diminish, what are the human-driven advantages that we can start to invest in and rely on over the long run? And so that's where I'm spending a lot of time and energy right now. And obviously what I care about is, how are the leaders becoming wiser, better leaders that can steward a company as a generational company? How are we going, again, deep into the hearts and minds of the buyers that we're serving to deeply understand them and build relationships that are impenetrable? How do we build out the uncopyable in a world of sameness? And to me, that's through these human connections. So you think about the blending of human and tech in the future. I think that's where these really unique, amazing companies are going to be built. And, the cultures that we form, right? The culture becomes the product. And this is an era when if we hire the best and brightest, and those are people that other people want to spend time with and be around, and that becomes part of our fabric as a company, that's, I think, the essence of long-term value. And I would say, if you can avoid being in the washing machine of AI and trying to follow the trends, that's also pretty important, because that's, it's not that you don't do AI. I think you kind of have to embrace AI.
Yeah.
It is happening. But are you trying to go raise a bunch of money as an AI company by venture capitalists and play that game? That's what I'm saying. You might get yourself in trouble if you're trying to play the current state. Instead, look, how to zig when everybody else is zagging, and what are they not doing right now that's going to be important 3 years from now? And if this thing does happen where these companies implode on themselves and venture capital is not what it used to be and SaaS companies are not what they used to be, what is going to be? So imagine, have a conversation with yourself 5-10 years down the road, and that conversation, see what yourself says, what happened, and what was most important, and what are you really glad that you did?
Well, thanks for sharing your story and the story of reigniting companies and reigniting founders to achieve the life they want and change the world the way they want to do it. So really appreciate it, Dave. Thanks for being on the podcast. We'll have the links to your book and your website in the show notes as well. I really appreciate you being on the Practical Founders podcast and sharing your story.
Great. Thanks so much, Greg. Really appreciate it. It's great to be here.
Thank you. Thanks for watching this week's interview on the Practical Founders podcast. Be sure to like this episode and subscribe to the Practical Founders YouTube channel to keep up with my weekly in-depth interviews with serious software founders who are building valuable software companies without big funding. You can check out my blog, all the podcast episodes, and information about my Practical Founders CEO peer groups at practicalfounders.com. or message me on LinkedIn if you'd like to connect. See you next week.